to the orbit. It is Thursday, February 22nd. We've got stocks in the green by about, we're looking at SPX, about 1.6% to the upside. Qs are up even more. Of course, the big story of the day is Nvidia earnings. Nvidia reported after the close yesterday. It is up big. Let's check in on Nvidia and see how that's affecting the rest of the market. Obviously, this is a big cap tech company, up 15% on the day. The expected move was closer to about 9%. I think it was about 10% to start the week. It actually, the expected move compressed a little bit into earnings and was down below 9%. And it actually was pretty accurate after the close yesterday, as Nvidia was up about 9% after hours. And then this morning, the buyers just came in and pushed it even higher. We are into that zone where it sort of has nothing but air pockets above it, above those prior highs from a couple of days ago. It's probably a lot of short gamma up in these upside calls, these out of the money calls. And you are seeing that kind of reaction in the stock. That, of course, is taking Qs up higher with it. A little note on Qs and SPY on expiry yesterday. It's a very interesting situation where you had the straddles because Nvidia wasn't reporting till about 4:20 Eastern time. You had Qs and SPY options go into the close. It's not uncommon to see Q and SPY options go into the close where a lot of that extrinsic premium is still on the options. And the reason for that is because Qs and SPY continue to trade till 4:15 Eastern, but people can exercise and assign for, let's call it about an hour after that, after the close. And what will happen on normal days is there's usually a little bit of premium. Traders are willing to pay, say, 5 cents for an out of the money Q or SPY call or put that they are short to take off that risk. Yesterday's was a really unique situation. One of the biggest sort of extrinsic premium moments after the close that I've ever seen. So the SPY and the QQQ straddles at the money were trading. The SPY straddle closed at 4:15 Eastern, still more than $2, right? So that means that had you sold that, sold options, and you're waiting around to take them off for pennies or 10 cents or something, you were staring at stuff that it's as if the day hadn't happened and the expiration hadn't happened. And the reason for that was Nvidia after the close and the ability for Nvidia to move the market after hours. If you had strikes away from the money, even if you were $7 away in Qs or $5 away in Qs or $2 or $3 away in SPY, those were at risk of assignment after 4:15, even after you could have closed them. And that is one of the interesting things with Qs and SPYs and other ETFs in a moment. I mean, yesterday was a very unique situation, but you have to be very careful when there is a big potential market moving event after hours, particularly in the case of Nvidia. It wasn't even a 4 o'clock or 4:05 earnings where you could have at least reacted and closed SPY or Q or other ETFs options. You didn't even have that chance because Nvidia didn't even report till after the options had closed at 4:15 Eastern. A very unique situation, one of the most extreme that I have ever seen. Now, that brings us back to, in SPX yesterday, SPX saw a real steep rally into the close, but those options are cash settled at 4 Eastern. So all of that nonsense that happened after the bell with Nvidia, SPX traders were done for the day. And that's one of the reasons that people gravitate, especially in 0DTE, for SPX options, is because they don't have to deal with that, even that 15 minutes after 4 o'clock. And they certainly don't have to deal with the risk of being assigned, or should they exercise something at, when they're about to go to dinner. So let's look at the 0DTE in SPX, back to SPX, and we've got about a 0.4% move for the rest of the day. Those levels are at about 50.80 to the upside and 50.45 to the downside. You see that move we got into the close, which was a pretty wild move up towards 5,000 into the close on what was pretty much a red day all day, turned into SPX, all the ETFs and SPX rallied into the close into Nvidia's earnings. There was probably a lot of short covering into the close. And then this morning, of course, Nvidia takes the entire market up with it. And that is quite a move in just basically an hour of market time, right? The last half an hour of yesterday and then the first half an hour this morning, you've got the SPX basically up almost 2.5%. So that is a pretty big move for just a couple of hours of market time. So with the 0.4% expected move, you've got to start looking at these levels. The week, it only takes you down. The expected move right now is 50.30 to the downside and about 5,100. So the 5,100 makes a lot of sense into tomorrow. If Nvidia and some of these other stocks kept going higher, you could easily see 5,100 in SPX. That makes a lot of sense. To the downside, if everything's just sort of reversed with, selling contracts at 50.30, there was some resistance, which may become support there. And you can see that where it sort of lines up with the highs 50.36 from yesterday or 2 days ago. So that sort of makes sense, but obviously that 5,000 level is really towards the downside now, the one to really keep an eye on. And perhaps if you get the chances to sell credit put spreads or something below that, it might be a little bit safer of a level. Now, back to sort of the Nvidia craziness, because there is something that could start to happen in this market. And I'm pulling up SMCI again. This is sort of the poster child for this kind of action. Look at that chart recently. Look at that volatility from, this hockey stick straight up to a big, pretty, high percentage pullback, 20 plus percent, back up towards 900 now. Keep an eye on, as we talked about, Nvidia was obviously important for the market itself because it's such a mega cap company, and it would actually move all these ETFs and indices by itself on its earnings with a move like that. But on top of that, as we talked about it the last couple of days, it was a real vibe check for the market. You've seen some of this, volatility to the upside, let's say, in a lot of these names. And if Nvidia had disappointed, or even if it had beat, and the traders' reaction and investors' reaction was to sell it and say, all right, that was it. That was the highs for Nvidia for now. We'll check back in a couple of months. Then what would happen is a lot of that action in some of these other names, it probably would have been done for a couple of months as well. It would have been hard to imagine some of these AI names and chip names and these other places where we're seeing this sort of wild action to the upside. It would be hard to imagine that continuing without Nvidia at least going sideways. If Nvidia was going down every day, it's hard to imagine SMCI going up every day. So those were the conditions going in. So now with Nvidia higher, and clearly their buyers remaining, because it went from plus 9% after hours yesterday to what we've seen plus 15% this morning. There's clearly buyers that could continue to push some of these stocks higher. Could is the key word. Now, what that means is, from an options trading perspective, is start to look around at some of these names, and if there is a lot of demand for upside calls. And what could start to happen is it's almost like a mini version of the meme stock era, where investors and traders start to reach for upside calls, and they're looking for dollar cheap calls. And if the stock does start to have some momentum higher, and you might start to see more short squeezes in some of these names. There's the gamma short squeezes that help accelerate these stocks higher. And what that means is there's a lot of upside strikes that market makers may have sold that call at 10 deltas. They bought 10 shares against every contract. The next thing you know, that stock's up $80. That market maker is chasing to buy. It's at the money. They need to buy the other 40 deltas at that point. It goes into the money and through the money, and then they've got another 50 deltas to buy. So they started with buying 10 shares. The next thing they know, they're buying the other 40 shares. And the next thing they know, they're buying 50 shares. So they're buying more stock as the stock goes higher. And that's the kind of gamma induced acceleration you could see to the upside. Now that tends to be towards the ends of these cycles, but it can last a while. And so it's something to keep an eye out, especially in these, as obviously Nvidia's as mega cap as you can get. SMCI is, it's in the Russell, it's considered small cap. It's probably not by market cap small cap anymore. But if that starts to bleed down into smaller names and you start to see some sort of euphoria in the market and a lot of upside call buying, be aware of that. And from a trading perspective, that means, especially here on Options AI, where there's a lot of spread trading, if you are spread trading, that means if you are buying something at the money and then selling something out of the money on the call side, that means you're buying lower vol than you're selling if that skew starts to go, because what's happening is those retail traders especially are pushing the vol, the out of the money vol higher. And that means you get to sell that by buying something closer to the money or closer where the stock is trading. And we can go over that. If we start to see signs of that, we can go over that on the orbit in upcoming days or weeks.